India market. Some market days feel loud, big candles, big reactions, but today's session felt more like a quiet negotiation. A slow tug-of-war between buyers and sellers, where neither side won loudly, yet the chart quietly revealed what's building under the surface. The broader indices moved within a controlled range, but the undercurrent of sector rotation, institutional positioning, and tightening price action hinted at something bigger preparing to unfold. Let's break down everything that shaped today's market and what it could mean for tomorrow. Global market overview. US markets gave mixed cues with certain indices showing resilience while others slipped into mild profit-taking. The Dow held steady, the S&P 500 stayed flat, and the Nasdaq was under slight pressure due to rotation out of big tech. Bond yields remained firm, reflecting continued caution from US investors. The dollar index held at elevated levels, keeping global risk appetite moderate. Crude oil traded range-bound today, preventing any inflation shock for emerging markets. Gold, on the other hand, continued attracting safe haven interest, a typical behavior ahead of major US macro announcements. Asian markets also contributed to the mixed sentiment, pockets of strength in Japan, sideways movement in Korea, and weakness in Hong Kong due to property and slowdown concerns. Europe opened slightly negative, echoing the broader global consolidation. Overall global picture, cautious optimism mixed with selective risk reduction. Nothing today indicated panic, but nothing signaled runaway bullishness either. These global cues aligned almost perfectly with how the Indian market behaved. Indian market overview. Nifty began the day quietly. Early strength faded quickly as heavyweights like IT, select private banks, and export-sensitive names stayed subdued. But the most interesting part was how Nifty defended its key intraday support zones despite global hesitation. Dips were absorbed almost instantly, showing domestic flows actively stabilizing the market. Toward the end of the session, Nifty displayed small upward pushes but lacked the volume confirmation needed for a sustained breakout. What emerged was a clear and tight consolidation structure, short-term compression forming inside a broader upward channel. BankNifty mirrored this behavior. The index attempted an early push, failed to hold higher levels, and then slipped back into a narrowing range. But unlike Nifty, BankNifty's candles revealed more compression, smaller bodies, tight wicks, and lower volatility, all signaling that the index is setting up for an expansion move soon. The most important observation for the day. Both Nifty and BankNifty refused to break down despite weak global cues. That's often an early sign of base building. Sector performance breakdown. The sector map told a clear story of rotation. Pharma showed quiet but consistent accumulation as traders looked for safety in defensives. FMCG also attracted stable buying, supported by benign input cost trends. Auto counters displayed resilience backed by improving retail indicators and stable commodity trends. On the weaker side, IT remained pressured. The firm US dollar plus Nasdaq profit-taking impacted big names. Metals struggled as uncertainty around Chinese demand and commodity repricing weighed on the entire pack. Some financial stocks also paused after recent strong moves. This push and pull between defensive and cyclical spaces created exactly the type of market where indices remain flat but internal churn is high, a warning that big money is repositioning under the surface. Top gainers and losers, live names. Sun Pharma emerged among the gainers with strong defensive flows supporting the uptrend. Tata Motors also found interest thanks to positive sector commentary and healthy demand indicators. FMCG names like Hindustan Unilever found quiet bids as well. On the losing side, Infosys, Wipro, and TCS displayed selling pressure due to its specific global cues. Metals like Tata Steel and JSW Steel corrected mildly on concerns stemming from weak Chinese sentiment. While the gainers reflected selective strength, the losers reflected where the macro environment created short-term caution. FII-DII activity. FIIs stayed in a cautious stance today, trimming exposure in the cash segment. What balanced the market was consistent domestic institutional buying. DIIs quietly absorbed intraday dips. This push-pull relationship prevented any significant selling pressure through the day. In derivatives, FIIs did not show aggressive short build-up, which means their stance, for now, is cautious neutral rather than bearish. DIIs focused their buying in defensives and high-quality large caps. This explains why the market did not collapse even when global cues were soft. Domestic flows once again held the index up. Technical analysis with corrected BankNifty zones. Nifty technicals, daily hourly 15 minutes. On the daily chart, Nifty closed near the middle of its recent range. Price remains above key moving averages, confirming that the larger trend is still intact. The hourly chart shows declining momentum but strong demand on dips. On the 15-minute chart, Nifty is clearly forming a compression box, small candles, narrowing range, and false breakouts during intraday spikes. Educational support and resistance zones. Nifty support 25,400 to 25,500. Nifty resistance 25,926,000. These levels define the immediate battlefield between buyers and sellers. BankNifty technicals, daily hourly 15 minutes. BankNifty is more interesting technically than Nifty right now. On the daily time frame, it continues to stay inside a contracting triangle, a visual clue that volatility is compressing. The hourly chart shows flattening oscillators, suggesting equilibrium between supply and demand. On the 15-minute chart, BankNifty is forming extremely tight candles with repeated rejections of both highs and lows, a strong sign that a breakout or breakdown is coming soon. Here are the corrected and verified educational levels. BankNifty key zones, corrected and accurate. Support zone 58,458,700. Resistance zone 59,000 59,400. These zones are the most actively defended and tested levels from today's live price action. A decisive breakout above resistance can drive momentum, and a break below support can open up a deeper pullback. Market psychology. Today's psychology was simple. No one wanted to overcommit. Traders kept positions light. Swing traders waited for confirmation. Intraday traders focused on reversals rather than trend continuation. Institutions avoided big bets. This created a low volatility environment where price action remained tight and mean reverting. But that kind of psychology, low conviction, low volume, high caution, usually precedes a meaningful move once a big global Q hits. Important news drivers. Globally, traders watched US macro events and the bond yield narrative closely. Asian markets added mild pressure with Hong Kong's weaker performance. Crude remaining stable prevented any inflation scare. Domestically, no significant policy announcements impacted the market. Sector-specific commentary in autos and select FMCG names drove stock-specific moves. IT remained under pressure because of global signals rather than domestic developments. Tomorrow's market outlook: educational, not advice. If global cues improve overnight, Nifty could attempt a breakout above the 25,900 to 26,000 band. On the other hand, if yields rise or US markets slip, Nifty may retest the 25,400 to 25,500 support cluster. BankNifty is the more explosive index. The contracting structure suggests that any move outside the 58,400 to 58,700 support or 59,000 to 59,400 resistance could set the tone for the next directional leg. Bias remains neutral to cautious until a clear breakout candle appears with volume confirmation. Watchlist for tomorrow. Educational chart study only, not buy-sell recommendations. 1. Sun Pharma. Study for a higher-low structure and defensive accumulation. 2. Tata Motors. Watch for a clean breakout above the recent consolidation with rising volumes. 3. Infosys. Observe how it reacts to global cues. An excellent chart for understanding macro sensitivity. 4. ICICI Bank. Inside a tight channel, a classic BankNifty leader to watch during compression. Educational insert: compression before expansion. Compression is a period where price gets quieter, candles get smaller, and volatility contracts. Most traders get frustrated here, but the smart trader studies this phase carefully. A compressed market is storing energy. And when the breakout arrives, supported by strong volume, the move is usually faster, cleaner, and more decisive. Learning to recognize compression early helps you avoid overtrading and positions you to react correctly when the expansion hits. Summary plus CTA. Today's market didn't make noise, but it communicated clearly. Global cues stayed mixed, domestic flows prevented a slide, and both Nifty and BankNifty tightened their ranges. With FIIs cautious, DIIs supportive, and sectors rotating quietly, the market is clearly preparing for the next move. Keep an eye on the support and resistance zones, especially in BankNifty, and watch global markets closely tonight. If you found this analysis helpful, stay tuned for tomorrow's deeper breakdown.